Column: Fund capitulation on U.S. bonds reaches historic levels. Hedge funds and speculators are dumping U.S. Treasury bonds at a pace rarely seen before, a sign of the rapidly accelerating momentum behind bets that the Federal Reserve will bring forward its first interest rate increase since 2018. What's more, the latest CFTC positioning data do not capture the leap in market-based inflation expectations to new highs and broadly hawkish remarks from Fed Chair Jerome Powell late last week. Taking those factors into account, and the fact that Fed funds futures now show traders think the first U.S. rate hike will be in mid-2022, there is every chance that funds' bearish view on treasuries has hardened even more. Commodity Futures Trading Commission data show that funds dumped 156,586 contracts of 10-year treasuries futures and flipped to a small net short position in the week through Oct. 19. That is the largest unwind since 2016, and the third largest since the contract was launched in the mid-1980s. Funds have mostly been long 10-year treasury futures since June last year, although never to any great degree. It remains to be seen whether this historic sell-off marks a return to the preceding 2.5 years of consistently bearish sentiment. The CFTC data also show that funds extended their net short position in 2-year Treasury futures by more than 92,000 contracts, the biggest sell-off since March. This comes as the latest Bank of America Fund Manager survey showed investors have never been so bearish on bonds since the poll was first launched 20 years ago. The scale of the selling is significant, especially in the 10-year part of the curve, and suggests the debate over whether the spike in inflation is temporary has entered a new phase. Team Transitory certainly took some heavy blows last week. Break-even inflation rates on Treasury inflation-protected securities and inflation swap rates broke higher across the curve to levels not seen for several years. On Friday, Powell said the risks are clearly now to longer and more persistent bottlenecks and, thus, to higher inflation, and admitted that the current situation is not what the Fed's patient approach was designed for. While he also stressed that now is not the time to raise rates and that the Fed can be patient, that was just a reiteration of the Fed's position. No Fed official is advocating rate hikes until well into next year.
European stocks end flat as industrial losses offset commodity gains. European stocks closed flat on Monday, as gains in banks and commodity-linked sectors were offset by losses in industrial stocks on rising bond yields. And as the outlook for the telecom sector deteriorated, the pan-European STOXX 600 closed largely unchanged at 472.21 points, with concerns over rising inflation and slowing economic growth also weighing on sentiment. Mining and energy stocks rose 1.8% and 1.0%, respectively, boosted by oil prices at multi-year highs and a rebound in copper prices as a drop in Chinese inventories fueled expectations of more buying. The market has been worried about the risk of stagflation for the past few weeks, and every time you get to see oil prices going up, that's when the market starts to worry that stagflation risk is coming back, said Andrea Sisson, head of strategy at TS Lombard. Rising bond yields, driven by expectations of monetary policy tightening in the U.S. and Britain, benefited bank stocks, with the sector rising 0.8% to a more than 2-year high. HSBC Holdings gained 1.9% as concerns about pandemic-related bad loans were replaced by a surprise 74% rise in the British bank's third-quarter profit and $2 billion buyback announcement. But rising yields weighed on industrials and utilities, as they made future returns from the sectors, which are largely dividend-linked, appear less attractive. Playmaker Airbus fell 1.6% on rebuffing calls to temper plans almost double production of its best-selling A320 jet family. Telecom stocks sank 0.9% after BofA Global Research reinstated underperform ratings on Nokia and Ericsson on low earnings expectations, and signs that the 5G market had peaked. The STOXX 600 finished at over 6-week highs last week, buoyed by optimism about the earnings season. The focus turns to major earnings reports this week, as well as a European Central Bank meeting. Of the 18% of STOXX 600 companies that have issued third-quarter reports so far, 63% topped analysts' profit estimates. As per Refinitiv IBES data, about 52% beat estimates in a typical quarter. UniCredit slipped 1.7% after the Italian government and the bank ended talks over the sale of ailing Tuscan bank Monte dei Paschi di Siena. Monte dei Paschi di Siena slid 2.4%. Spain's Sabadell rose 2.8% after it said its board had rejected an offer from Cooperative Bank for its British subsidiary TSB.
Indonesia sees Q3 GDP growth at 4.3%. Why? Warns of future headwinds. Indonesia expects rising exports and a recovery in household consumption to result in economic growth of 4.3% in the third quarter, refining an earlier forecast for 4-5% growth. But headwinds lie ahead, its finance minister warned on Monday. Southeast Asia's largest economy grew 7.07% in the second quarter, but a new wave of COVID-19 infections in July, triggered by the spread of the Delta variant, and measures to control the outbreak have hurt its economic recovery. Third quarter data is due to be released on Nov 5, referring to the new third quarter forecast as an upward revision. Finance Minister Sri Mulyani Indrawati said indicators for domestic demand had improved since the second week of August, when antivirus measures began to be relaxed. Exports from Indonesia, the world's biggest exporter of thermal coal and palm oil, have also surged amid record high prices. This shows Indonesia's economy is quite bullish, Sri Mulyani said in an online news conference, adding that the economic impact of the virus resurgence was seen as not too deep. The minister also gave a new official forecast for 2021 full-year growth of 4%, compared with a previous forecast of 3.7% to 4.5%. Analysts predicted Indonesia's economy to have expanded 3.2% in the July-September quarter and 4.6% in the current quarter, while 2021 growth was seen at 3.4%, according to a Reuters survey this month. In the fourth quarter, there remains potential for a rebound, although at a more normal rate. But the rebalancing of economic activities in China, the United States, and the European Union could affect us in the fourth quarter and into next year, Sri Mulyani said. She listed the possibility of tapering in the United States and the European Union, a potential slowdown in China's economic growth, and rising inflation globally, among other uncertainties, as potential headwinds to Indonesia's recovery. The government was anticipating financial market volatility and lower demand for goods from emerging markets due to these global events, she added.
Supply headaches sink German business morale to 6-month low. German business morale deteriorated for the fourth month running in October as supply bottlenecks in manufacturing, a spike in energy prices, and rising COVID-19 infections are slowing the pace of recovery in Europe's largest economy from the pandemic. The IFO Institute said on Monday that its business climate index fell to 97.7 from an upwardly revised 98.9 in September. This was the lowest reading since April and undershot the 97.9 consensus forecast in a Reuters poll. The weaker-than-expected business sentiment survey was followed by a grim outlook from Germany's central bank, which said in its monthly report that economic growth was likely to slow sharply in the fourth quarter. The Bundesbank added that full-year growth was now likely to be significantly below its 3.7% prediction made in June. Supply problems are giving businesses headaches, IFO President Clemens Fuess said, adding that capacity utilization in manufacturing was falling. Sand in the wheels of the German economy is hampering recovery. Half of all industrial companies are planning to hike prices due to the continuing supply problems, which is a record high in the survey. IFO economist Klaus Wohlrab said, the bottlenecks for intermediate goods and raw materials are spilling over from manufacturing to other sectors of the economy too, such as retailing, meaning not every Christmas present will be available for delivery in time. Wohlrab added, the supply problems would slow down growth to roughly 0.5% in the fourth quarter. Wohlrab said, the German economy expanded by 1.6% quarter-on-quarter in the 3 months from April to June. The Federal Statistics Office will publish a flash estimate for GDP growth in the third quarter on Friday. Analysts predict a quarterly expansion of 2.2% from July to September. The government on Wednesday is likely to slash its forecast for economic growth this year, after leading institutes cut their joint forecast to 2.4% from 3.7% last week. For 2022, the institutes predict 4.8% growth. The coronavirus crisis has turned into a scarcity crisis, VP Bank economist Thomas Gitzel said. In addition to the supply problems, the spike in gas and energy prices is complicating the recovery. Gitzel added, other analysts pointed to rising COVID-19 infections in Germany, which could lead to renewed restrictions for retailers, bars and restaurants over the winter months. Commerzbank economist Georg Kremer said companies were expecting politicians to react to the latest increase in coronavirus infections with new restrictions. In addition, the current coronavirus wave is leading to factory closures, especially in Asia, which will exacerbate the material shortages in Germany. Kremer added, the German economy is unlikely to grow much in the fourth quarter. Stagflation is on the horizon for this quarter at least, he said. Taiwan seen growing 4% in Q3 on pandemic hit, but exports help. Taiwan's trade-reliant economy is expected to have expanded at a slower pace in the third quarter due to the island's COVID-19 outbreak. A Reuters poll showed, though supported by export growth and healthy global demand for semiconductors, gross domestic product likely expanded 4% in the July-September period versus a year ago. The poll of 27 economists shows after it grew 7.43% year-on-year in the second quarter. That would be its slowest rate of growth since logging 5.09% in the fourth quarter of last year. As a key hub in the global technology supply chain for giants such as Apple Inc., Taiwan's economy has outperformed many of its regional peers during the COVID-19 pandemic as it benefited from robust demand for its tech exports during the work and study from home trend. But domestic consumption was hit by a rare rise in community COVID-19 transmission starting mid-May and imposition of strict restrictions on gatherings and other curbs. The outbreak has now ended, and the government has been issuing shopping coupons to help restore consumer confidence. Economists' forecasts for preliminary GDP data due on Friday varied widely from growth of 2.5% to as high as 6.5%. Kevin Wang, an economist at Taishan Securities Investment Advisory Co., said the drop-off in growth was because of the impact on consumption from the COVID-19 outbreak at home. At present, although exports in the third quarter have eased, they are still not bad. Investment seems to be okay too, he added. Firms like Taiwan Semiconductor Manufacturing Co. Limited have also seen demand soar from a global shortage of chips that has shuttered some auto production lines and affected consumer electronics. Exports in September were the highest monthly figure on record, rising in expectation, beating 29.2% from a year earlier to $39.65 billion. The government has remained bullish about Taiwan's full-year GDP prospects, though, with policymakers including the central bank governor saying it could grow 6% this year, higher than current official forecasts. The International Monetary Fund this month raised its prediction for Taiwan's 2021 growth to 5.9% from 4.7% seen in April. However, the economy in China, Taiwan's top trading partner, grew at the slowest pace in a year in the third quarter, 4.9% from a year earlier, hurt by power shortages, supply bottlenecks, and sporadic COVID-19 outbreaks. Taiwan's preliminary figures will be released in a statement with minimal commentary. Revised figures will be released later in November, with more details and forward-looking forecasts.